Two times this week, we've seen a new all-time high daily close for Bitcoin. It seems it's imminent for a new all-time high. This is actually closer to a new all-time high than what the US stock markets are at. They're getting close, but not close enough. Now, it's following very similar paths to what the global markets are doing right now, many putting in new all-time highs after the tariff uncertainty. So we have a lot to cover in today's video, along with stocks, cryptocurrencies, and commodities. Hit the like, subscribe to the channel. You guys know the deal. It's your home of macro cycle analysis, including the 18-year cycle. Things are still on the trajectory to higher and higher prices. So let's kick it off with the traditional markets, getting a full scope of what's going on, and then break it back down into Bitcoin, how this stuff is relating to Bitcoin or how Bitcoin is relating to the traditional markets. Now, keeping it nice and simple for anyone new joining us here, we're looking at a cycle play out or a similar pattern to what had happened in 2020 after a very significant dump, obviously being the COVID collapse. So far, we've seen pretty similar patterns play out. The higher low came in basically the same timing. We saw a bounce out of the higher low. We saw a correction into the next higher low. That's what the red line here is in the background from 2020. And currently we're watching and waiting for a bit of a grinding effect here. Whether market thinks it's going to correct a lot further, or if we're just going to grind out at pretty similar prices, basically holding up at key support levels. Those levels are around the previous zones that the market had hit support and resistance at, being around 56 to 5,700 points, currently sitting at 5,900 points. This is for the S&P 500 futures market. Now, the thing we did see in the last 2 days was the biggest, most amount of money that retail investors had put into the S&P 500. That is on the 19th of May, over $4 billion that day. The last time we saw retail do this was around the end of March, just before the tariff collapse. So I'm definitely not calling for another collapse like the tariff. It seems like we've got that amount of fear out of the way, as I'll show you in just a sec. But even if this grinds around here, it wouldn't be unsurprising considering what retail has done yet again after that is, the market has climbed from the low to the current levels 23% in about 44 days or 30 trading days. As we can see with the fear and greed index, we've hit greed again for the S&P 500. Last time this happened was back in November. So quite a long way away. That was all the way back at similar prices at about 6,000, 6,100 points. So we're only a few points short of hitting that 6,000 point level again. And of course, a new all-time high for the S&P 500 seems relatively imminent at this stage. What does this mean to the market? If you have been following the channel, you may have seen or recall me posting this chart before, just breaking down the S&P bull market along with Bitcoin cycles since its genesis. Now, I've given it a little update here with a few colors so that's a little bit easier on the eye. And the area we're interested in are the white squares or rectangles, I should say, and how many bars we have within a rectangle. Previous rectangles, they're all looking at the bull market of BTC, and I'm just referencing the bull market roughly here as a guide of the price range when it has closed above a key resistance level. In previous cycles, that's been above the previous old all-time high. In this cycle, obviously we hit that new all-time high a little earlier, then retreated for almost 8 months before we took out the all-time high. So that's why it's a bit of a question mark here on the last couple of bars. However, it still gives you a good guide as to how many quarters have occurred in the previous Bitcoin bull markets. As you can see, it's generally around 3, maybe 4 quarters for the stock market when we've seen Bitcoin also run into those all-time high prices, basically putting in its cycle top. So if history is to rhyme, then we're beyond the halfway point now for Bitcoin. Maybe 1, possibly even 2 more quarters to go for this Bitcoin bull market. Ideally, we'd all love to see the price go even higher, but just to keep things in perspective, based on the last 16 years, 15, 16 years of history, one would have to at least put into their roadmaps to anticipate some sort of peak this year in 2025. If it goes beyond, let's deal with that when the time comes. Now, the other thing that has continued to work out relatively well in this second half of the real estate cycle, so the US 18-year real estate and economic cycle, yes, you know it, this is the chart right here, is that the US dollar comes down in the second half of the real estate cycle. Here we are in the second half of the real estate cycle. The US dollar is coming down. An easing of the US dollar generally means that commodity prices will increase. And at the moment, we've basically seen that, even though the liquidity from the Fed and global money supply is also increasing, we're also seeing, well, assets or risk on assets also increase with the US dollar coming down. As we said, this is very typical of the second half of the real estate cycle. So we saw a peak and a fall into the mid-cycle. So a peak somewhere around 2018, some areas are 2019, but we also saw that dip come into 2019/2020, obviously with COVID bringing the downfall. Now, out of that point, we are in the second half. US dollar typically comes down, and yes, that's exactly what we're seeing here, especially with the weakness under the 100-point level. Now, the other thing we're still following is the pause here on the US dollar. The previous times we saw the US dollar break to a new 3-year low has brought on a pause in price, basically price to consolidate after a pretty significant decline. Again, breaking that into a 3-year low price here, as we got last month with the lowest close in 37 months. Now, the pause may last a couple of months. In previous times, we've seen it rise again. So the US dollar has risen after this pause, this consolidation. In this case, we're back under a lot of previous resistance and previous support. So this in 2016 and 2020, it was resistance at around 100, 101. At the moment, however, could be putting in another resistance underneath that level. So basically putting in a lower high, which becomes more evident on a weekly chart. So this is your swing chart here, lower highs, lower lows. And at the moment, again, attempting to break above 101, but so far has failed to do that this week. So that's also good news for Bitcoin and potentially even some of the stronger altcoins, as I'll show you in just a moment, because, well, we're just not seeing that altcoin rally come back to the space. Now, using this style of analysis along with the 18-year cycle has helped us position ourselves with our long-term portfolios. Maybe you find that with your real estate portfolio or getting into real estate through these periods, especially of significant decline and significant fear in the market. Now, we use this with our stock portfolios, in particular ETFs, real estate, and of course BTC as well. If you want to know more about that and how you can improve your own portfolios, check out TIA Premium. Links are in the video description down below. Now, we're also seeing that risk on environment spread across the globe. Day after day, new fresh prices. In several cases, new all-time high prices for stock markets around the world. The Aussies here, the Aussie market today, it's trading at the moment, getting very close to 8,400 points. The previous all-time high is 8,600 points, so very close to that now. As we looked at yesterday, Canada put in a new all-time high. Again, new all-time high prices on the daily chart. The top 50 in Europe, new fresh highs. The top 50 being made up of the UK. New fresh highs, very close to a new all-time high. It's made up of Germany, new all-time high prices. It's made up of France, new fresh high prices. Of course, the Dutch, fresh high prices in the last couple of days. Italy, new fresh prices again. These are nearly 20-year highs here for Italy. And the other big countries around the world that make up our global economies, you've got Brazil, new all-time high prices for their stock market. China, also closing above key support levels. So also hit new fresh highs just last week, but closing above key support levels, which is encouraging for further development to higher prices within this cycle. Also, Japan testing those tops, slight pullback here, but still above the 50% level. And India also putting in fresh highs late last week and now having a pullback, but still above its 50% level, even testing and closing above the previous tops there in 2024. So pretty much around the globe, you're still seeing asset prices go up. You're seeing their stock markets go up. We've looked at commodities also increasing, and then the cracks that we're continuing to cover here day by day, cracks in the economy, cracks in the, well, that would potentially lead to a correction in the 18-year cycle. You're 14 years up and 4 years down. I suspect when we get to the 4 years down, people are going to look back to the previous corrections we had in 22, in 20, in 18, in 2015, and all expect that the correction is going to be relatively short-lived. I think that's going to be not the case, and you're going to see a much larger correction. Cracks being stuff that is going on now in the US with the 10-year yields. These are rising, which is obviously, well, could put pressure on the rest of the economy in the long run. And the bonds also continue to fall, putting in very close to some fresh lows recently, and almost with the monthly closes, you have to go all the way back to 2007 for those levels. So more on this as the story continues to develop, and these things definitely take some time, as we know with the 18-year cycle. But how this all relates into crypto and Bitcoin is that we still have time left in the game. You can see some of the cracks forming. This may in fact lead to the reasons for the 18-year cycle peaking and then correcting. We still have to wait and find out, but we still have time left in BTC. That's in the longer term cycle. So let's start to break it back down into some of the shorter term stuff here for Bitcoin and the altcoins. Now, the fear and greed index has cooled off a little here over the last couple of days, 73, 71, down to 70. So things are getting a little bit cooler here, especially for cryptocurrencies with the search volume. Google Trends here, crypto has cooled off. We were up at around 23, dropped down to 17, 18, then back to 17. Meanwhile, and this is the big difference here, Bitcoin has been picking up. So as we talked about day after day here on the channel, and you can see it in the data, you can see it on the price chart, which is the most important to me, is that we continue to see the price of Bitcoin rising while altcoins continue to fall. Some are in stronger positions, not all of them, which is why it's more important now than ever to pick the right ones and not hope and pray that it's going to be a mega altcoin season and everything is going to get green dildos to new all-time highs. You're seeing the same thing here. People are interested in looking at Bitcoin as opposed to cryptos overall. Now, the total liquidations aren't anything to write home about today. Basically, $250 million liquidations. You can see here with the chart, pretty much coming back to some sort of average, nothing extreme at the moment. The exchange volume has also dropped off yet again after peaking on the 14th. So we're a week ago, there was a peak there, put in higher highs and potentially just cooling off here a little bit. We've obviously seen that with the liquidations and as I just pointed out with the Google Trends. Now we have the Bitcoin chart and the all-time high daily close. So again, those strengths are coming through on the chart. Now I'm going to chuck all the lines back up. This is the 3-day extension that we're following. And again, we now have 3 days above the 50%. So we have some positive signs that the market wants to attempt a new all-time high. The next resistance levels 109 and 111. And should we get past that, then I'm looking out towards the mid-teens, starting at 114 up to 117. So why 114? Well, that's our diagonal from previous old all-time highs. And then 117 is a 100% repeat of the 3-day swings. That's a pretty important swing because, at least from what we can see, the market has been respecting that 3-day swing. In particular, the 50% level basically called it to a T, called the pause, the consolidation, and then we got that pop out on a Sunday, held again for the last 3 days, and looks like it wants to attempt those higher prices. Naturally, I think it's a good question to ask, like, why or how is this happening? How is Bitcoin going up on this lower volume? Meanwhile, the rest of the market isn't. I put something together here, just thinking about the supply and demand of the market. Bitcoin climbing on low volume could mean more people aren't willing to sell at these prices. So if you're already holding, you're not willing to sell because obviously you're seeing the price climb higher, while others aren't willing to buy here either. So the people that are out of the market aren't willing to buy, probably hoping for a pullback, which hasn't eventuated yet after the 43 days since the low, leaving few people to buy. That is, the price goes up. So it seems counterintuitive. But if you don't have the supply on the market, because call it 0 people want to sell, or very, very few people, you can't have 0, but there's a few people that want to sell, but even if you have one more than what is willing to sell, then naturally the price has to go up. especially if they're willing to pay more for it. So you might have 5 people willing to sell. If you've got 6 people willing to buy and they all want to buy the same amount, they're going to be bidding the price up. So I use 5 and 6 because in the past, maybe we saw 50 and 60 people selling. So 50 people selling, 60 people wanting to buy. You had 10 times the amount of volume, just as an example. Whereas now the volume is less because a lot of that buying and selling potentially happened through February when we got these spike lows to the 80s and mid 80s. And then also the next spike low in April when we had the 74 up to sort of $80,000 level. So maybe a lot of the Bitcoin had changed hands, it wanted to change hands, and now we find ourselves at a point where those who have Bitcoin aren't ready to sell, and those who want Bitcoin, although less because you've got the others who also want it, aren't willing to buy because they're waiting for this pullback. And that's what happens on these price movements as it gets a grind sideways and then pops higher. A grind sideways, pops higher. Grind sideways, pops higher. We've seen how the market's grinded out and then popped higher. Yes, back then there was a lot more volume. Not many people wanted to sell through this period in 2023 leading into early 2024. However, it was a different time. It was a time when most thought the market was going to go down further. Everyone thought that we were going to have some major recession and essentially nothing was going to survive because of how bad things were with the economy and Biden and all sorts. That was the feeling back in 22 and 2023, then into 2024. So you had that lower volume. So now we've got the pop higher, a grind here on a shorter time frame, another pop higher, a grind here on a shorter time frame, and we're potentially going through another grind here before, let's see, we get this little pop higher. Now remember the analysis we've done on the channel this week, looking at how many weeks in a swing is the average and what's the maximum we can expect. So far we have 1, 2, 3, 4, 5. We're into our 6th week. The maximum we have seen this cycle is, I believe, 8 weeks in the same trend. I think it happened through this area here of October, November. So it's not impossible for it to go to 9 weeks, but there is very few examples of it going to 8. There was 1, and there was about 3 examples of 6 to 7 weeks. So we're basically in that now. It's either got to happen, say, this week, next week, or the week after. So just this little period here of late May, early June, and that would run us into the maximum amount of weeks in the same direction that we have seen throughout this bull market. As I said, not impossible, but it's getting to those statistics of it being extremely unlikely to go any further in terms of time from where it currently is. Total crypto market cap, and you can see the difference here as I'll show you with total and total 3. So this is the overall market cap in a stronger position than total 3, which of course includes all of the altcoins and excludes Bitcoin and ETH. Total market cap with Bitcoin is at its 50% level. So this is on the extension of the overall range above the 50% level of the down range. So it's a rock and a hard place, but it's in a better place than what you can see with total 3. Total 3 is below the 50% level here and has been rejected a couple of times. Now, if this started to fall and break underneath the swing bottom here at 780, 800 billion, that would be an extremely weak position, and then 720 is the next weakest position. So that would basically set it up for a retest at 720, so $720 billion. Currently, as long as it continues to consolidate above 800, 840 billion, we could expect another push higher and to take out that 900 and then these highs here around 960. So at the moment, it's not the worst case, but it's still weaker than the total market cap, and the total market cap has ETH and Bitcoin included, which shows the strength in those assets. USDT dominance is still not playing ball, at least for the altcoin bulls. For Bitcoin, yes, we're getting the grind higher, but the dominance here for the USDT dominance, which is essentially the liquidity for our crypto sphere, is still holding up at the all-time support level. The all-time support level that goes all the way back to 2017. So each time this the USDT dominance has come back and tested this line, that has been a significant high for Bitcoin, if not the all-time high for that cycle. So a test, and then it's bounced away. Now, the only time it hasn't done that was recently. So at least that's some positive news here for us, or at least us that are hoping the prices go higher. You had the December top, the January top, holding out at 3.7% and then ran higher. So at the moment, it's still finding this level as support. Who could have thought that a line that is 8 years old is going to play havoc with the market? And this is exactly where it is day to day. Still has not broken down yet. So the next key level is below this swing low, and that's at 4.45%. So mark that up on your charts. Watch for any sort of closes below 4.45, and that is potentially going to be some pretty good signs to come back and test underneath 4% on the USDT dominance, which is more liquidity back into the altcoin space. So speaking of altcoins, ETH is in an okay position, also under its 50%. As you can see from the charts I'm about to show you, these are in a weaker position than what Bitcoin is, barring probably SUI. But ETH here holding above its diagonal. So this is the diagonal for the entire bull market this cycle. There's the low to the next lows here in November, and it's just above that level. So that's still a good sign at the moment. Still holding above 2200 as well, but ideally above 28. So 2750 to 28 would be a much stronger position to then go and tackle the mid 3000 region. ETH BTC, on the other hand, continues to slide a touch, just holding above the key level of 0.023. If that breaks down, then watch for movements back to underneath, roughly around that sort of 0.021, or even back to 0.02. So basically 2% of Bitcoin's value. Now let's run down the list from, I think, strongest to weakest, just using SUI, XRP, SOL. SUI on the US dollar, and I'll get to the Bitcoin charts as well, is still underneath the $4. So it got rejected at the 50%. So this is the largest swing that we've been using, hit the 50%, closed underneath it, came back to $4, also found resistance underneath that level, put in a lower swing top, so slight weakness forming yet again, and then is underneath the previous swing top at 386. So it's potentially just grinding out here. It needs to get above 420. That is the key level now for SUI. Otherwise, it risks coming back to test 320. XRP, underneath 50%, both of them, in fact, and then is on the verge of closing underneath that swing top as well. So that's at $2.36. Basically had an attempt and has come back. So the strong ones look like they need more time. The weak ones, definitely a lot more time. Let's take a look at SOL here. That has closed underneath, or hasn't even got to test the 50% of the down range. It has also failed at the 50% level. It did get a little higher, but this range could not extend the first range out. You want to see the ranges extending in the early stages so that you're seeing more buyers. It's a sign that more buyers are coming back in. Otherwise, if it starts to fizzle out, then, well, you're getting more sellers coming in. It's pretty much that simple. Now, these charts, the altcoins against their Bitcoin charts, you can see how this relates to BTC and the weakness here for altcoins. SOL BTC came up to test the 50%. It also came up to our line that we're watching, that rather not zone that I've had on the chart for the entire bull market. The reason that's the rather not, because that was the previous resistance, became support, and generally you would see, or you would find some weakness if it wasn't able to maintain that 50% level. That is the 50% level of the entire Solana BTC bull market. So it's tested it, it's come back up. Doesn't mean that it's entirely over, because you can see the higher lows are still in. It's just going to need more time before it's able to test that again. SUI, on the other hand, you can see is in a slightly stronger position here. It's above the 50% level of the bull market range. It's tested 50% and is now cooling off again. So it wasn't able to break through on those 2 attempts that it's done in the last month. And for XRP BTC, it's above the 50%, but really there's no momentum coming through here. Lower highs, a flat base, which typically means it's going to come back and test the next support level. Now, I'm saving the best hopium for last. So if you haven't subscribed yet, what are you doing? It's been something like a 25-minute video. Hit the subscribe and like the content. Now, here's the hopium for BTC. You've seen just how the alts have had their move and then are pulling back against BTC. Meanwhile, this is just all of everything that's going on in the chart. Bitcoin has continued to climb higher. We have a little, we have a couple of, or one close above the 50% extension here, waiting for the next week to close. So we still have 5 days to go there. The levels above the 50% we're watching are around the 119 on this extension, and then all the way up to the mid 130s. Now, you might recall on the shorter term timeframes here, we are watching the all-time high 109 to 111. Sure, call it every $1,000 you're watching. But in terms of the long-term and short-term strength and weakness, this is how I split them up to have a look at the strength here on a short-term and a long-term basis. Those are the levels that I'm watching out in the near term because it's on the 3-day chart. Whereas this chart, I'm looking at the weekly swings, and it's also, more importantly, on the monthly swings here as well. So we're looking at the monthly low from August to the January top, back down to the April low, and the 50% level here is at 104. So we need to close above this at the end of the month. That's 11 days away. Nice close above the 50% would mean we have a much better chance of reaching that 134. So if we were to see some corrections here along the way for the daily chart, yet the monthly chart continues to show strength, it just requires patience before we get to some of these attempts to test these higher targets. That's why I've got the shorter term price targets and then the longer term price targets. You start to see that weakness form on the short term. It might just be a short term weakness because the longer term chart is in a sign of strength. So that's your cue to like and subscribe. Check out the links in the video description for TIA Premium and the free reports coming out, along with any of your crypto exchanges here, especially in Australia with SwiftX, $20 free BTC. Nice little shout out there to end the video. See you at the next one. Till then, take care and peace out.